So I don't know if I would get back in it at this point. High is 154. So let's just watch here. Giving it a chance to dip. Added back here for the break of 153. And now looking for 155. So watching up here, added there for 155. And then if we get through 155, looking for 156. There we go, there's 156, taking half off the table, taking another half off the table. Stops now break even at 153. Added back at 156 for 157. Took a little profit at 157.50. Added 157.50, now looking for 158. So watching here, there's 158, taking a little more profit. Halt level is far away, 168. Taking a little more profit off the table, just under 160, psychological level where people will have orders placed. So my small position of 147 shares in this account is up $3,600, which is nice. But I'm not going to trade that or sell that right now. So I'm a little worried about profit taking up here. Watching. Big sellers on the ask. Watching it to thin out. Added small size there. 2,000 shares. Now watching over 62. Added again. And watching to see if we break through 63. Out for now, 62.04. So this is the way I often trade these, is I just buy and sell as it moves higher. But you have to be careful, because if you get in too high, you can get caught holding the bag. Now, on the other hand, you could say, geez, you know, why didn't you just hold the whole thing, you know, from 150? Well, that first trade you saw actually went red, $2,400. But look at how this just dropped all the way down here to 155. It's just very easy to make a mistake. So you can see it. This is the level 2 window in the top corner. It's showing the quotes. The buyers are on the left, the sellers are on the right, and then this is showing every individual order that goes through the market on this stock. So this is the market data that traders like myself are using each day. So reducing my share size a little bit if I decide to take another trade. The high a day is 163. So putting my order around 162. I'm going to draw a little support level down here. So that's support down there. That's resistance up there, 163. Now, technically there's that bottoming tail there. I don't know if that'll end up getting corrected. That doesn't, I don't know. We'll see. Not sure. So 155.84 is support. So the closer I could get into support, the better. Traditionally, this is the first 1 minute micro pullback, but the range is quite large in this area. Some reporting brokers are crashing. Robinhood is down, some are saying. Adding here at 162, 161.17, and looking for the break of 162, and then looking to see if we squeeze through 163, which would be a new high of day. So watching over 162.50. So right now we've got 162 on the ask. So it's not breaking fast enough, so I'm selling at 161.84. The problem with a trade like that is I'm getting in right underneath the high a day, and if it doesn't work, I'm gonna be in too high, because I can wait a little bit, but I've got to be careful. So if I add back up here, and it is tempting to add back, you know, I'm adding literally at high a day. So if you had the smaller position size, you might have held longer. This is the problem with trading with bigger position sizes. You trade with big size and you have to keep a really tight leash on it, because if it doesn't work right away, you can get smoked. When the momentum is building, volume is increasing, that's when I want to be buying. When it suddenly stalls out, and it was sort of stalling out there, that's when things get a little scary, because all of a sudden you're like, hello, where's the buying? I'm in this thing at the top. So I had the right idea. I got shaken out on it a little bit. Can I get back in up here? Not yet. Now we've got 4 green candles in a row. So we've got 124 million shares of volume right now. We just had a little a candle wick there where the top went up to 166.90. We're definitely seeing the volume building, or well, not relative to the first candle, but in this area here, which is good. So we already know that earlier here we had a bigger drop where we dropped from 163 to 155. So that was an 8-point drop, right? So we have to recognize that that can happen again. And so here's another drop. So this is our first pullback right here. That was our first pullback, and this right here is our second pullback. So trading with smaller size as we get higher up. Added right here for the breakthrough 168 and looking for 170. So what I'm thinking on this is that we squeeze through this level, we get through 168 and we get over 170. That's what I'd like. So watching 168.50. So now watching 168.50. So it's a little too heavy, so I'm selling there at 167.77. That was a little flat top breakout, and that was the level that needed to break. So now we're getting a second candle of pullback. So up about 4,500 on the 147 shares there in on Charles Schwab, which is nice. And again, there's no flipping rule. If you're up on Robinhood or Fidelity, there's no real point in watching the price action, because you're going to get, you know, they'll penalize you if you sell. So not sure. It's a little hard to tell so far about support levels because we don't have much chart history to work with. The previous high of 163 is important. So you see that was a big burst to selling right there. And then that causes a panic. All of a sudden people are like, oh no, I'm in too high. And this also breaks the trend a little bit where, okay, 4 candles up, 1 candle back, 4 candles up, 2 candles back. All right, 3, now 4. That one's a little bit bigger. So I am concerned that this is going to see a lot of selling, but not really in earnest until after day 70, because 70 trading days, because of the lockout period. Insiders are restricted from selling today. Almost all of them are. There's only a small number of shares that could be sold by insiders today. Yeah, it wouldn't surprise me if some charts are delayed, E-Trade charts or Robinhood. This is a huge amount of data going through. So usually my best trades on an IPO are in the first 10 minutes, just like that. So this may be it for me. Is usually that initial burst, right, as trading begins, where things are really exciting. So a new pattern would have to form here. The pattern that I really like trading is buying that first pullback after a fresh breakout. But, this is now sort of a different, you've got 3 red candles, then that bottoming tail, then another red candle, and now it's getting a little tricky. So today's day 1 of SpaceX trading. So the IPO price is 135. We're currently up 25% from the IPO price, which means the market cap of so we were at 1.77 trillion times 1.25. So it's now a $2.21 trillion market cap. If anything, this looks like the beginning of a head and shoulders pattern, and the head is the shoulder, the head, the shoulder, and then it comes back down here. So that's something I would be on the lookout for, potentially. I don't think that there's going to be a lot of people that are shorting this on day 1, especially with the fact that it's going to be included in the NASDAQ 100 in 15 days. But, some people might. So if that were the case, a drop back down, it's not impossible. Just looking at these levels here. Again, it's hard to say that these are really valid levels because it's quite early. This is the first, little bit of price action we've had. Now, if I'd gotten my full 4,000 share order on Schwab, I would have been more inclined to take profit. I would have been up quite a lot more than I am now, like $120,000. But given what I got, I'm kind of okay with holding at that IPO price of 135. So I think for most retail traders, this area is going to be quite difficult. Volume weighted average price is the orange trend line. We've got 173 million shares of volume. We're about $10 a share off our highs. So we know the float is 555 million shares, and that's definitely affecting the price action on this because there's right now we have 1/3 float rotation. What we like to see on a stock that has the potential to make a really big move is a high degree of float rotation, where all the shares in the float are being turned over. That's when you start to get parabolic momentum and things really explode. And this just structurally isn't set up for that to happen. The float is too large. Yes, the float is small relative to the total number of shares outstanding in the ratio, but 550 million shares is a larger float. So, so arguably this is not going to get cleaner from here. It could, but I don't really expect it to. I think this is a good example where we've got that shoulder, the head, we come back down, sort of the edge of the shoulder, and it feels like a little heavy here, if anything, but maybe it holds up in this area around the volume weighted average price. What we don't know is how many traders are out there who've been wanting to trade this and are like, oh, it just started trading 15 minutes ago, now I can buy. But are there really enough individual retail traders who are going to go out there and just buy it at this price? Not $135 a share was already an obscene valuation by pretty much all experts. 160 is ridiculous. Just considering the closest comps that you could look at, and you could say nothing is comparable to SpaceX, and you're not wrong in a lot of ways, but it's hard to justify the total addressable market on their AI segment that is substantiating this really high valuation. Starlink is a great product. The connectivity segment is great, represented 61% of their total revenue last year. It's their cash cow, but they're taking all that money and then they're spending it on space and AI. AI with the new $920 million a month contract with Google and the $1.25 billion a month contract with Anthropic is going to be generating more revenue this year than ever before for the business. But it's got a long ways to go in order to really substantiate on paper this valuation, which is right now over $2 trillion. So the halt levels, we didn't have any issue with halts. The halts are too far away on this one, up at 175 and 143, 10% away from the current price. So so we've got a lot of room there. Which I suppose is helpful. A lot of traders don't really understand how halts work and don't like being caught in a halt. So this will be a nice live archive for members. I'm going to save this. So we're on a little uptrend right now, coming back up. The lows here now rallying back up a little bit. Our high a day was 168.75, as you can see right here. I have not gotten back in. I look at the total volume is declining a bit. The liquidity is, I mean, there's still a lot of volume, but declining versus those highs. This could now be a bit of a sort of imperfect reversal coming back up. So we should see in this area, the high of that candle. Let's see. Oops, not there. So I'm going to mark the high right about there, 165. And then we've got a little resistance right around here, 167. And then that would be through 168. So an ascending support trend line down here. It's not perfect, but so that's our high a day. I'll put that one in yellow for now. Then this is our support. This one was another level from earlier. So you see how we break that level, breaking that ascending support level. Now it's still a little early to say with certainty that this is the most respected level because these are a little early, but it does seem like that at least this double top level up here of 165-ish and the high a day are certainly spots to keep on watch. If we could hold over 165, that breaking that resistance and holding above it would be good. But I would be a little concerned. One of the challenges with a stock of this price range is that you can instantly be down $1 a share. And so it can be hard to minimize the cents per share losses, which means you might be taking more risk than you kind of would like to. So if you're risking 50 cents or $1 a share, you kind of need to make $2 a share to justify it. So if you got in at 165, you really do need to see a move to 167. Are you likely to see that in one big candle? I'm not sure. We are seeing, 300,000-400,000 share sellers on the ask. They're getting bought up here. So it's going 227,000 and then so that's a little tricky. It kind of broke there for a second. So those sellers kind of pulled their order back. They can't. The orders didn't fill. They just sort of pulled them back, and then put them back. So I never like when the market makers do that. They kind of trap you into buying at the top, and then they flush it back down against you. So right now it seems like there's some sellers up against this 165 area. So what does it look like for this to break over and hold over that level? Well, it would first need to break 165 and then go up to like maybe 165.50. What was the high back here? Look at the 10-second chart again. So the high on this candle, well, yeah, it was 165.50. So there you go. So you break, you hold, and then this is where would I want to jump in right here at 166 to look for the squeeze to 167 and 168. I just don't think the risk to reward is as good right here. I don't know. I just think that right here, you could tell how heavy it is. Just there's a lot of volume going through, but into all this volume, there's just a lot of shares for sale. So now getting in at 167 would be a quick scalp where you're getting in and looking for an immediate test of 168 and a squeeze through the high a day, 168.75. But, I don't know. You don't want to get caught, with someone with a big market order that, causes another 4 or 5 point flush like what we saw back here, right? So the range, the range is getting smaller, the candles are getting smaller, the volume is declining a little bit. So all of that means this is a riskier place to be a trader. This is a flat top breakout pattern right here. And that little flush down to, what was the low there? 164.60. It's not really clear that it's going to be able to break through these highs at the moment. So I'm up $39,000 on it in my day trading account, up $4,400 in my long-term account, or my Schwab account. It's got 147 shares in 3 accounts there. So I am just sitting on those right now. Watching the all-time highs. Now, we had a couple stocks last week. STI was one of them that was moving up on a satellite catalyst. ASTC was another one. I wondered if either of those would get attention today, but neither of them have. $219 million shares of volume right now. So some of you guys who are newer might feel like, oh gosh, I'm not up as much as Ross. I'm going to keep trading this. And I could say the same thing. I'm not up as much as, a whole bunch of other people. But I got what I got out of it on that first clean move higher. And I'm not sure that it's going to get easier than that. They usually don't. This might be an exception because it's got so much hype around it. But the difference between being up 39,000 on it and being up, 139,000 on it really would just be taking bigger positions. And if I took bigger positions, that means I'd have to be comfortable with taking more risk and taking a bigger loss if it didn't work in my favor. So, and I'd have to have the buying power to do it as well. So I traded this about as aggressively as I could. I was in a good position on the day to take that risk. And so, another 83,000 share seller on the ask here at 167.68. So it breaks that level. But you can see how fast the level 2 is, moving here. There's just so many buyers and sellers coming in and out. And then you get that kind of flush back down. So would it really have been worth it to get in at 167 and sell at 167.50? I mean, it's only 50 cents a share of profit. It doesn't really justify the risk you would have been taking. But if you're still holding, now it's back down at 166, 165. So this is where, when it's unable to pull away, it stops being interesting to trade. So now the trend is sort of rolling over a little bit more. Bigger red candle there. So again, that's a bigger drop back down. So at this point, we're seeing more of the big red candles like that one and this one and this one. And although we had a few big green candles early on, At this point, we're seeing small green candles, but still big red candles. So again, speaking to the fact that the risk has increased on this and the reward has decreased. Now, this week has been really great. We've had some great price action. We saw some huge moves. I think that a lot of traders are really excited about this IPO, so there was a lot of hype around it, which certainly helped. And that resulted in momentum in other areas of the market. So as I sit here right now, I'm up 84,000 on the day in my my active day trading account here, which is a great day. And I made more than I thought I would on SpaceX. I'll admit that. I didn't think I would make as much as I did, but I did pretty well on it, so that was nice. And this week, not including today's profits, I was already sitting at $261,000 on the week. So now after today, I'll be at $345,000 on the week. That's just in 1 week. So market's pretty hot right now. As always, I'll remind you guys that my results aren't typical. I've been doing this for a long time. It took all of the years up until today for me to have the level of experience and intuition and capital to be able to trade the way I trade. So it's not going to happen overnight, but I'm thrilled that the market is picking back up, and I hope that we continue to see some great opportunities next week. So I start streaming every day at 7 a.m. and I stream for members at Warrior Trading during my morning trading session, which starts at 7 and is usually done by 9:30, 10. So for those of you guys tuning in on YouTube, I've got a link to our 2-week trial pinned to the top of the comments and in the description. If you want to check it out, you're welcome to come join us for the next couple weeks and see what it's like to trade in a community of traders who are looking for volatility every day. SpaceX, I mean, this is probably the only day you'll see me trade it for the next year more. I might not trade this again for years. I don't trade Tesla. I don't trade stocks like this, but I trade IPOs. The reason I trade IPOs is because hyped up IPOs are very volatile, and they've become predictable to a certain degree of what you can get in the first 15, 20 minutes. What it's going to do over the rest of the day, I'm not sure. What it's going to do over the next couple weeks, I'm not sure. I think the inclusion in the NASDAQ 100 is a good thing. I think that we're probably going to see, if it closes today as a big green candle, some more opportunities on it. I have a bias because I still am holding 147 shares at 135, but I think it looks good, but I also am very concerned over the next 6 months that we're going to have insiders that start taking profit. And I don't know that, the fact is, with over 10 billion shares outstanding and 7.5 billion that'll become eligible to sell into the market within the next 6 months or so, think about how many days it would take for the 7.5 billion shares to get sold. Right now, we only have 235 million shares. And this is probably going to be the highest day, one of the highest volume days. Typically the IPO day is one of the highest volume days. So if it's averaging 50 million a day or 70 million a day, it would take weeks of steady, consistent selling for them to be able to unwind those positions. And where's the demand going to come to help support the price while that's happening? So that's what I'm worried about over the next 6 months. But at the end of the day, we don't know how many of those insiders will take profit and how many of them are going to hold for the bigger move. So yeah, I don't know if Will there be anything else to trade today? Well, it's 12:30 on a Friday. Probably wouldn't typically expect a lot else, but I think SpaceX at this point becomes a little bit of a distraction that a lot of people are probably watching it, but to the extent that those people can really trade it profitably or make a lot of money on it, I'm not really sure. So my last trade was sort of back in this area where I was looking for that squeeze through the high. What was the timestamp on that one? So 11:56. It's right here. And at that point, I was looking for this to break right through the highs. I had got in a little high at 168. And I knew I was in high, but I was like, okay, we're moving quickly. I want to look for it to squeeze through 168.75, 169, and then I was hoping we'd break 170 and make our way, higher. And so it sort of popped up for a second to 168.50, but it felt like there was a lot of selling. It just wasn't quite strong enough, and I was like, uh-oh, this might be a problem. And so at that point, I said, I better get out of this thing. So I got out at 167.77, as you could see right there in my orders. So, and that was a 6,000 share position. So I was in and out right there. And it's a good thing I got out, because if I had held, I wouldn't have wanted to hold through that pullback with that much share size. And then the bounce off the volume weight average price, valid, but I don't like that trade as much on a higher price stock, because it's just the risk is a little too high for me. So anyway, so nothing on that one. And then now as we sit right here, we're kind of range bound a little bit. Range bound meaning we're below the high, we're above kind of the support levels. So we're just kind of in an area here with a bit lighter volume. You're not breaking new highs, you're not breaking new lows. That's where more volume comes in, more traders get excited. So, now it's just kind of, I don't know. Am I worried about it breaking below the IPO price of 135? I would be worried about that within the next 6 months, but over the next 15 days, I'm not worried about that, especially with the inclusion in the NASDAQ 100. But, I could be wrong. But my gut feeling, it ultimately, this position that I'm still holding, I should probably check on it around 3:30 near the end of the day and decide, is this closing strong enough that I think it's going to continue into Monday? I wouldn't hold 8,000 shares over the weekend into Monday in my big account. It's just too risky. Too much could happen. But since I've got such a great cost basis because I got the shares from Schwab through the IPO request at 135, I'm kind of like, you can give them a little more space. Now, on the other hand, you could also then let it come all the way back down to break even, and that would probably be a mistake. So at a certain point, you should probably take profit off the table. But right now, the bigger picture is that we've come down to around 155 down here, and we held support in that area. So that's good. 150, $0.50, that kind of psychological level is good. Right now, this area is sort of an early support trend line. This is a little bit of resistance trend line. So, I'm giving this a little bit more room. And again, like I said, I wouldn't do that if I held 15,000 shares. But with, and even if I had 1,500, I might take a little off the table. I'd be up 43 grand. But with 150 shares, being up or down 3,000 or 4,000 doesn't make a big difference for me. So when I can get myself in a position where I've got that nice of a cost basis, I like to try to let it work. It doesn't always happen, so I'm grateful that I got it. End of day price predictions. We still have 3.5 hours before the closing bell, and then of course there's after hours trading. part of me wouldn't be surprised if it stays within this range of 155 to 168 because the float is so big. We might just stay in this range, not having enough sellers to really knock it down, but not also having enough buyers to really send it higher. But I think there will be probably residual buying support throughout the day as people recognize, oh, trading has begun. I'm going to go buy my 100 shares, 1,000 shares. You multiply that by millions of people, and that's a lot of volume. So, that might kind of keep it propped up. And then if you cross certain points, like a high a day break, some traders are going to come in like the way I do just to trade that quick breakout. But I think that right now I would put my money on expecting a big move, a really big move one way or the other. It feels quite heavy right now. So I wouldn't expect that it necessarily goes much higher than 175 or 180. A move to 200 would surprise me, and a drop back down to 135 would really surprise me. So I don't think that either of those are really highly likely. I think that we're more likely to stay somewhat range bound and maybe have a couple false breakouts or false breakdowns. Now, we were looking at UBXG earlier. This one, this is a stock that's up about 63% today. We peaked earlier today around 150%. It's Chinese. It says Swiss, but it's actually it's Chinese. You can see the address here. So this is a stock that had a bit of momentum, had this nice squeeze from $4 all the way up to $11.44. You can see I traded it. I didn't do super well on it, but broke the ice. Then it pulled back quite a bit. And when it curled back up, we were sort of watching this earlier in the broadcast around 11:30, wondering if this was going to pull away up towards these previous highs. And it didn't. Sold off. But now it's back kind of at the VWAP. And I think that this could be one to consider into the afternoon. I suspect, I just sort of have a feeling that traders are going to be looking for something to trade that's a little bit more within their safe price range, that has maybe higher percentage return potential than SpaceX. So it wouldn't surprise me if you saw something starting to squeeze, but some of the others that have moved today, are down quite a bit. So BYAH was up 118%, or was up quite a bit more, but that's what it's at now. Cast, this one's at 22 million share float, has halted a number of times as we were talking about earlier. So rallied up, sold off, rallied back up, big ranges. Ruby, a little cheaper, below $1 at 96 cents. CUPR, this one had a big rally up to 850 and then kind of has unwound back down here. So when I'm trading using the candlestick charts, I'm primarily looking at the daily chart for possible areas of resistance. So CUPR had 1128 as a 200 moving average. UBXG under the 200. So this one doesn't have any nearby resistance, which is one of the reasons I liked it on the daily chart. I thought that kind of had nice potential. But I checked the daily chart for support and resistance, and then after I've checked the daily chart, then I'm really looking at the 1 minute right here, and I look at the 10-second, and then I'm looking really closely at my market data, my level 2 and my time in sales, so I can gauge the interest and the sentiment. I can see when people are buying, I can see when people are selling, and so that's really important. GMM, yeah, I'll look at that one. So yeah, any ticker requests, I can look at some different tickers. Maybe what I'll do is I'll put a chart. I'm going to rearrange things a little bit. I'm going to look at tickers over here, and then I'll put a chart for SpaceX just in the other side. So that's a nice rally from 163 back up to 166, 167. Again, that 168 level is resistance. So, and then 168.75-ish is the high a day. So you're just, it's hard to trade it up here because you're so close to high a day. 250,000 share seller there at 68. That's a really strong big green candle though. So what brought in that volume there? Individual buyers, you know, I don't know. That's 1 million shares in a 10-second candle. I mean, those are huge amounts of volume. But then at this point, you worry about getting a rejection up at this level. All right, so let's see. I'll just put this over here for right now. So GMM, you asked me about. Yeah, it's got about 35 million shares of volume today. An interesting daily chart for a curl, but it's sold off quite a lot. It's not holding up super well. So our high a day here, you know, we're kind of creeping up to this level. We keep sort of flashing a little bit higher there, and then you get that flush. This is a really dangerous area for me because often with small caps, I get tempted to buy to anticipate that breakout and expecting that when we break that level, we'll get a really nice big squeeze. And you might, but can you tolerate getting in at 168 and then catching a flush down to 166.50? It's $1.50 per share. It's a big flush. And so how much do you need to make if that's your risk? Well, you should make twice what you're risking. So now you need to make $3 a share. So you need to get to 171 just to cover your risk. And you know, $3 a share is a lot to ask for. I mean, it'd be nice to get that. It's not impossible, but it just feels like your downside risk is too high, and it's hard to have certainty that it'll break at the moment you get in, unfortunately. So, and yeah, I'm still holding shares on Schwab here, up $4,600 with a cost basis of $135. So I got those shares through the IPO, and they sit there for right now. I haven't decided how long I'm going to hold those for. So in my main account, my position size is 0. I'm all out with $39,000 of profit. So let's see. Another dip back down there. So some users reporting issues with Robinhood. Our KLB has a 500 million share float, so the float on that's too high to expect any type of day trading, in my opinion. forecast. Still sort of doing the same thing, halting up, halting down. I don't know if an international resident can get shares through Schwab. I'm not totally sure. I think I did hear I saw some people comment on my video I uploaded earlier today asking if people got shares from Australia. A number of people commenting from Australia that they were able to get shares, but it was like 5 or 10 shares. It was pretty small positions. SNBR, thank you. Okay. So cheaper, 17 cents a share, or 17 million share float, 41 cents a share. The stock is U.S. consumer discretionary, home and hardware. Sleep Number. I mean, it's at this point, because it's dropped down so much, it's been stair-stepping down. So I just don't like that pattern. Unfortunately, it doesn't look very good to me right now. I did look at RKLB and I mentioned that the float was too high. So Robinhood requires you to hold your shares for 30 days. Fidelity said 15 days. E-Trade said 30 days. And Schwab said they don't care if you flip them. You could sell them on day one. They don't care. So I could sell my shares if I wanted to. So this right here is tempting. Again, this is very tempting for me to get back in, but I recognize that I might be getting baited into sort of a liquidity trap where they make it look like it's going to go. You buy, giving them the volume they want to sell shares and then dump it back down. This is an imperfect ABCD pattern for a breakout, but we don't know how many people are going to be selling against 168. That's the problem right up here. So, you know, I on the one hand, I want to participate in the breakout, and on the other hand, I've touched the stove enough times to know that I get burned up here a lot. But sometimes I'll get a cookie, and I don't know which one it's going to be today, but I'm cautiously looking at it. But I'm thinking if I punched it for 8,000 shares, I could lose 2.16 grand very quickly. And I don't want that to happen. You know, $84,000 is an awesome day. So if I don't have a high level of conviction, it's better usually for me just not to take the trade at all. So you know, I don't know exactly. So they can't make you hold. You can sell your shares, but they'll penalize you for selling. And it might be some type of deal that the broker has with the banks, but I don't, or with the underwriter, but I don't really know, because then why is it different for Schwab? So I'm not clear on exactly why, you know, some would be okay and others would be not okay with it. So it is bullish that we're consolidating right underneath the high of day. There's no doubt about that. That is bullish. This is a bullish pattern. The price is holding up well. But is it going to be strong enough to be able to break through this ascending support level and go up to these areas? So we're starting to perk up a little bit more there. So that's a new high of day. So I'm watching, but we dip back down to 168.20, 168.35. A little selling here going through the market. So there's a seller holding it back right here. So we broke the high a day by, about 20 cents. And now we're coming up to 169. To be honest, we've seen small caps that have broken half dollars and whole dollars better than this. So I had my hand on the buy button for a second there, but now I'm lifting it back off. If it didn't break that seemingly very logical place cleanly, then, would it break 169 cleanly? It's right there. When we broke through high a day, look at the amount of volume we had. That was a lot of volume on that candle as we hit 169. But then we ran into a seller. There was a wall up there. So this is a really tricky spot because you're right at a precarious point. You're right at resistance. And we want to see it break. We want to see it pull away, but it keeps tapping this level. Now, usually with small caps, I'll think, okay, we're going to tap this level a few times, and then whoever's there selling is going to get sold, and their shares are going to get sold, and then we're going to push through that level, and finally we'll pull away. We'll go to 169.50, 170, 171, 172, and then we start to really open up in earnest. That's what I would expect from a small cap. This is not a small cap. So, can I really count on this to pull away in that manner? 275 million shares of volume. There's 169 on the ask. Now, I'm participating in the sense that I'm still holding in my Schwab account, but I'm not participating in the sense that I'm a little too nervous to add up here in my big account. So there's 169.50. We go right up to the half dollar. Can we go up to 170? We dip back down to 169.17 on the bid. Right now, we're not seeing volume really increasing substantially on the 1 minute chart or the 10-second chart. We're remaining relatively consistent. If we saw volume ramping up, that would, correlate with typically increased momentum. So 169.50 on the ask. There's 169.74. 169.76, new high of day. 169.79. Going up another 3 cents. 169.80. 169.85 is the new high. So we're moving a little more here. 169.94. So coming up to 170. $170 on the ask with a huge stack of sellers. So all of a sudden there it thins out a little bit. All of a sudden there the volume changed. We had a little shift. We had a big burst of volume that went through. What happens is the algorithms respond to that. They pull back because heightened volatility increases risk. And then they fill back in. So we got a topping tail, an upper candle wick up to 171. But a candle wick like that is bearish because it shows us that while the price moved higher, it also got pushed right back down. There was a 200,000 share buy order at 170 that went through the market. So now we've got 171. I'm glad to see this. But what I don't like and what's always disappointing is when you struggle. Why did we struggle initially here? Right? What we're seeing right here is what we would typically expect to have seen right here the second we broke this level of resistance. And it kind of struggled here, and then it pulls away, and now it's opening up. So up $5,500 from my 135 cost basis there on those shares. Up 39,000 in my main account. I didn't get back in, just watching this area from the sidelines. New high a day, 172.90. I don't think there's too many people that are shorting this, so I don't think that we're truly going to get a short squeeze. I just don't think there's enough traders able to short that will get a short squeeze. So there we have that drop from 172.90 all the way back down to 168.82, then a little bounce back up. Another bigger red candle forming. So now on the 5-minute, you've got this gravestone doji, this candle with a big topping tail, which is bearish, and then the next candle going red for a pullback. Coming up towards 1 o'clock Eastern Standard Time. So a big rally back up there. The dips are getting bought up. Nice, Christian. Got the dip. Good for you. So typically, I would look for a break through the high. So the high of day is 72.90, but there's a high of this candle here, which is just under that level at 72.70. Buying for a quick break through the high of day is like a scalp trade where you get in at 72.70 and sell on the break through 173. But the risk to reward doesn't really work to do that on this price range, because if it goes wrong, you could lose $1 a share, and your upside, the break of 173 is usually like 50 cents, like right there. 173.25, you're usually taking some profit. So when you're risking $1 to make only 50 cents, you've got to be right. You've got to have really high accuracy in order for that to work. And it can be kind of demoralizing when you catch a big loss, because it'll wipe out 2 or 3 of your winners. So it ends up being a little bit harder to maintain that. High a day here is 173 to 174. So now a little consolidation right under 174. Some people would jump in here and then look to take profit on the break through that level, similar to what we were looking at 173. You still have the same issue with the risk and reward not really being lined up very well. We often see that when you come up to that level and there's a 120,000 share seller, which there is in this case, that people can kind of panic out of it. Who are in too high. So we did get that early indication from Bloomberg that the price was going to be 175. Then it opened at closer to 150. But now here we are back at 175, just about. High day is 174, but we're getting close to 175. So another little rejection. Now 300 million shares of volume coming up. So for those of you guys tuning in on YouTube, we have a 2-week trial for $20 at Warrior Trading that gives you access to this software that you can see right here. And we also have a simulator that you guys can use that allows you to practice the new strategies you're learning in a safe environment, which is what we want you to do. We don't want you to put real money on the line until you've first proven profitability in the simulator. So in the simulator, you could be jumping in using your hotkeys, trading the same way that I trade every day. This software right here I use for scanning. This is how I find stocks that are moving in real time. I am still curious if we get a power hour squeeze on anything going into the close. I think there's a lot of traders that are still around today because of the SpaceX IPO, so it's possible that we will see momentum into the afternoon, but will be to be determined. So I'll put the link for the 2-week trial in the description for this stream, so you guys can check that out if you'd like. That also gives you access to my daily broadcast where I share my market commentary. Traders certainly do seem to be buying the dips on this, although the dips are quite large. So now people who bought that dip, who are actively trading this, would likely be taking profit around 174, at least a little off the table, and then maybe holding a little bit to see if it breaks through 174 and puts in another step higher. I often look at these patterns as stair stepping. So one step up, one step up, one step up. These are getting smaller, which is not what you really want to see. You'd prefer to see them getting bigger and bigger and bigger for building momentum. But this is, again, $173 a share, 555 million share float. Today's the day a lot of people are focusing on it, but on any ordinary day, this would not fit my 5 pillars of stock selection, and I would not trade it. The only exception to the price and float is that it's a very hyped up stock. And it's reasonable to expect to trade in and out of it because it's a little too expensive to buy it. The dips are a little scary to buy as well because they're big and it could keep going the wrong way. So it just, sometimes you get to a point, and I would almost classify this as a grinder right now. It is grinding higher, but it's not going parabolic. Now, could it? Well, I sort of don't think so, but I sort of don't, because I think the float is just too high for there to be that degree of supply or demand. And I think that you don't have the element of a short squeeze on it because availability of shares to borrow is very limited. It's about 300,000 shares on the ask at 175. So I think it's probably fair to say that I could have been more aggressive buying some of these dips down in here, but it's not really the usual spot where I'm going to be aggressive. So as we come up here to 175, you can see when we hit 175, we've got that seller about, well, so that seller actually pulled their order back. So do we break 175? There's still about 5 or 6 sellers at that price. None of them appear to be a big sell order, but they're clearly absorbing a lot of buyers. 21,000 shares. Interesting. You would think it would have broken there. Look at how tight this range is. You see how tight it is? And we pop, and then we drop, and then we come back up to 174.35. So look at all that volume right there. This is a tug of war. So it pushes one way, and then the other way, and then the other way. Low of 173.82, high of 175.50. So up about 6,000 in my longer hold here with 147 shares. Looking to see if we get another dip to consider in my big account, because I can't really buy into the highs because of the tug of war up here. But I don't know, even if we get another dip, if I'll actually feel comfortable buying it, because I didn't feel comfortable on these last two. I'll just check my scanners and see if anything else is moving here at the moment. So now 176. High a day, 176.49. A lot of sellers at 176.49. Do you see how they're all stacked here? Hundreds of thousands of shares at 176.49. What an unusual place to put such big orders. Look at all those sellers. All stacked up there at 176.49. You can see them right down in here. So we can watch to see around support. We have this ascending support trend line. So we can see if we come back down to that area. So my first trade when it began trading was at $150.23. That was my first trade, $25 a share ago. And my Schwab account, I was able to get shares at 135, as you can see right here, but only 147. I asked for 4,250 shares, but they only gave me a partial fill. So let's see how much we dip down here. Typically buying into weakness as this is dropping is a little risky because you don't know if someone else is going to panic sell and you're going to get an even bigger red candle. But we have some ascending support here. Now, how valid is that trend line? We don't, it's hard to say for sure, but we do have it there. So the low right now is 173.29. So watching to see if 173.29 breaks. See, the challenge with buying this dip is when you look at the 5-minute chart, you've got 2, 4, 5 big green candles in a row. So you have to acknowledge that we are fairly extended right here. But you don't want to underestimate how strong something can be. So we broke that level. And we're stair-stepping down a little bit more. We got a big flush all the way down to 172. So anyone who is using this as support, right, the low of that candle, bails out right there. So now you get a bigger drop and an even bigger drop as more people bail out. Now that dip's not working. This is pushed sort of 2 steps down. 1 step, and it didn't rally back up like it did on the last one. It's now done a second big step down. So our previous resistance here was around 168.69, and now we're coming back down closer to that level. So I wouldn't like to see it break 170, but it might, and if it does, then you probably would look for 168.69 as the next level of support. EDHL is moving higher, and it has a halt level at 1106. So the halt level's now just moved up to 1129. This is a stock that we traded 2 days ago when it made this squeeze here up to a high of 18. Oh no, it was yesterday. Yesterday morning we traded that one. Then pulled back, popped up a little bit, and has pulled back again. So EDHL would really need to break through like 1150 or maybe 12 to get more interesting. Even then, it's a little tricky because it's kind of on the backside of this move, but you know, 1182 to 1821 is a pretty big window. So I could see why some traders would be interested in that. It's up 68% today. So I'll keep that on a side chart. Earlier we were looking at UBXG. UBXG has this pre-market high of 1144, which I also thought was interesting. SpaceX right here on the side had that bigger red candle, is now pulling back a little bit. So you can see this, this is a replay of the moment we IPO'd. So the moment we IPO'd, we were showing 150, and we didn't know, of course, when it would IPO, when it would start trading, but we were watching it and we were ready. And all of a sudden it began trading right there at 1146 in about 45 seconds. And you could see initially the spread is 150.85 cents by 150.90. Halt levels 165 up, 135 down. And initially we have a little seller at 151 and a pretty big buyer at 150. And so as soon as I saw this 2.8 million share buyer at 150, I was like, all right, I think I should get in. So I punched it right here, but notice that I filled at 150 and 43 cents. I filled a little high. And when it didn't break immediately and this started to get to be a smaller number, I was like, uh-oh, I may have made a mistake and I need to get out before that breaks, because if it breaks, it's gonna be bad. So I took my loss on that first trade, and then it ends up rallying back up. Now I saved these archives and upload them for members to watch later. This will go into the section with other IPOs, because IPO trading is it's a specific setup. It's sort of a specific strategy, and so anyways, then as it rallies back up, I ended up getting back in and taking more trades on it, and as you can see now, I'm up quite a bit. So this I'm going to save for members as the live archive of SpaceX. I'm not seeing really big candle wicks. We filter out stale data like that to try to make sure the charts stay clean. So this is dipping back down a little bit more. So current time about 1:21. So still a little bit early for power hour to begin. So we'll mark out the high here on SpaceX, 176.49. It doesn't surprise me that SpaceX hasn't halted, just because it is a bit too expensive and the halt bands are too far away. Yep, so I'm up 39,000 day trading SpaceX right here, and I'm up another 5,500 on a few shares I got through Charles Schwab's early IPO request system, whatever they call that. So sitting in the green today, $84,320.78 in the day trading account, and then still holding these positions in Schwab. No trades in the small account today. I didn't see anything I really liked well enough, and it was kind of SpaceX focused today. UBXG popping up a little bit again there, breaking the volume weighted average price. Halt level's 856. High of regular trading hours is around 9. So what's the high of that candle? High right now is about 82. So trades up here, the risk would be a little higher. I'm trying to make this window a little bit bigger so I can see it better. We'll keep SpaceX on the side there. So high volume on those green candles, lighter volume on the red candle right now, but it's dropped down quite a bit.